Jeff, the wealth builder, financial advisor, strategist, cash value, life insurance enthusiast. We're on Money Mondays. I love Mondays. It's the start of the week, and it's the day that I get the opportunity to talk to a dope financial professional. So we're on Money Mondays here, and today's guest speaker, guest host, personality, all of that in a bag of chips is Miss Shonta Thomas, MBA, enrolled agent, Shonta Thomas Enterprises. Welcome to Money Mondays. How are you doing today?
I am doing awesome. Just want to say thank you so much for having me on today. I am excited to share all the things.
That's what I'm talking about. So I love talking about taxes because taxes is one of the things that I think most people overlook and don't pay enough attention to. So that's why I'm always trying to shine a light on taxes and the importance of having tax strategy in your portfolio. Because if you make the money and you can't keep the money, did you really make it? So oftentimes on Money Mondays, we always going to have a tax strategist component wrapped up into this because people need to be made aware of the incentives. Like the government like really lays out some incentives to say, if you do this, we're going to give you some money on the back end. If you do this, we're going to give you some additional incentives that we're not going to give anyone else. So we need to be in a constant mindset, I always say, to make sure we shine a light on what the government wants you to do so you could keep more of your hard-earned money that you're making. So before we get into this, before we jump into this, I'm so excited to be talking to Shonta today. Shonta, tell us a little bit about you are and why, and what's your special sauce? Like, why should people listen to you?
Okay, awesome. I am Shonta Thomas. I have been in the industry for 19 years, believe it or not, as a tax professional. And most of my knowledge has been in the tax industry. So most of what I've done throughout my life has been tax industry on the business side at that. So I've worked for large Fortune 100 companies. I have been the CFO for public figures. You all know some of the names. I have had the opportunity to work alongside who you would call celebrities. So I understand how it works on the business side, on the individual side. I come with a lot of knowledge. And so my specialty is tax planning, helping people to reduce their taxes. But also in that, it's also helping people to build their wealth. So it's not just helping them save money on their taxes, because as Jeff said, that's great. You know, if you can reduce your taxes, those types of things, that's great. But it's not about how much money you made, it's how much money do you keep. So we want to make sure you can keep more money in your pocket. So that, yes, that does infringe on the tax planning side, but it also means, how do we start building wealth for your long-term future? What does that look like? And how do we help you get there? And so that's really what I'm all about, helping my clients to do, reduce their taxes and build their wealth.
I mean, I know a lot of people get so intimidated when it comes to taxes, and people get spooked out. People get stressed out. People, they get into different characters, especially in April, and especially when the quarters went for entrepreneur, when those taxes are due. So can you just explain in simple terms, like what is income tax? Like, what is the purpose for the income taxes for individuals, and why should they be paying more attention to the taxes in their lives?
So income taxes is exactly what it sounds like. It's taxes on your income. And so you can make income through a lot of things. You could be in the stock market. You can make income through a business. You can make income as a wage earner. So there's multiple things where you can make income. And so basically you have to pay taxes on that income. Now for individuals, think of those as your wage earners. So from our perspective, when we say individuals, we think of wage earners. And then when we say small businesses or large businesses, some sort of business, then we're thinking of some sort of business type attached with that individual person. But looking at it from an individual perspective, it's essentially you're paying taxes on the money that you've made all year. So it's always on a year lag. So you think 2023 we're in right now, you're going to pay taxes on the money you made this year, or make sure what we call true up. So we want to make sure if you are a wage earner or you paid into the IRS or paid into the state, that what you paid in was what you were supposed to pay in. Did you pay in less? Did you pay in more? All of that gets trued up in April, right? That April 15th deadline that we all think about, or some of you go on extension. So it's always on a year lag, and you're looking at making sure that you did what you were supposed to do the prior year. Now, for individuals, you're going to be filling out that 1040 form, and businesses, there are multiple forms that you might fill out depending on what type of business. But from a perspective of an individual, if you want to try to reduce your taxes, the things you want to look at are like credits and deductions. Are there things out there that you can do to help reduce your taxes some? But when you think of income tax, it's just what are the taxes on the income that you make?
So speaking on that, on deductions and things of that, is there some easy tax tips that individuals should always look to see if they can include in their individual tax strategy for the year? Is there some easy ones that they should, always look to consider to make sure that they take advantage of?
Yes. So when you're thinking about individuals, if you're a wage earner, let's say you don't have a business, you don't have anything like that, you're not doing stocks or anything like that, you just go to a job every day, you come home from that job every day, and you pay in income and you have taxes that are taken out of your check. If you're someone that falls into that category, one of the easiest things that you can do, and one of the primary things you can do, is set up some sort of retirement, something like that. They're going to help you reduce your taxes, right? So there are different things that you can put in place that can help you reduce your taxes simply by setting up like an IRA or something like that. But one thing a lot of people don't realize that they can do, which is what I call an easy peasy one, that a lot of people already are needing this, is if you own a home, you can actually literally write off things like doors, getting new windows, a new boiler system, all those things that are energy efficient. Guess what? There are energy credits out there. If you are needing to get a new car, you can look at getting a car that has energy credits associated with it. So just thinking a little bit differently about stuff that you do every day is going to help you as a wage earner. And then from a business perspective, easy things that you can do. One of the top things you can do, which I don't think people often think about it this way, but one of the top things you can do is bookkeeping. No one associates bookkeeping with tax planning. No one.
Okay.
But bookkeeping is the key to good tax planning, because
Okay.
think about it like this. Do you remember what you purchased on January 5th of this year? Oh, you did this? Nobody does. I have no on January 5th of this year. So if you have really great bookkeeping and you're keeping those great records, you have those great receipts, you're going to be able to reduce your income more simply through those expenses. So the better you do that, the better off you're going to be able to save. And a lot of people don't realize bookkeeping is the foundation. So if you have great bookkeeping, you can go out to try and get funding. It's a lot of things you can do, but if you don't have good bookkeeping, you're not going to be able to do those things. So even simple things like the home office deduction and stuff, you got to make sure you have good books so that you can write those types of things off. The easiest thing you can do in your business is maintain good bookkeeping. That's the number one thing. And then you can start looking at layering that with other things to help you reduce your taxes.
Awesome. We're talking to Shonta Thomas. We're on Money Mondays, where we always talk to a dope financial professional. And today we're focusing on taxes, on the individual, and taxes for the business. Now, one of the things that I know that like this pandemic has like turned everything upside down. So it's like, it was a big free flow of money that's come in. Now money is starting to tighten. So, is there been any new kind of like financial strategies around taxation since the pandemic that individuals should start to look at more, as well as businesses?
Yes. So during the pandemic, one of the things that occurred during the pandemic is there was a lot of money. The government was giving out, states was giving out, people just giving out money, hand over fist, right? So you had all these people like, I got extra money. I'm going to go buy this course. I'm going to go do this. I'm going to go do that. Well, guess what? The pandemic is gone. That extra money is gone, right? And so people are tightening up and they're not spending in the same way. So we have to really think strategically, now after the pandemic more so than we did before. So there's this great strain that's occurring right now in the market. Some simple things that I don't think people often think about when it comes to financial strategy is real estate. A lot of people are like, don't buy real estate right now because interest rates are at 7%. Guess what's going to happen when those interest rates go down? The cost of the properties is going up.
Mm-hmm.
Rent is going up. And so it's going to actually keep a lot of people from even getting into the market because they wait to purchase. So one of the key financial strategies you want to be thinking about right now is doing the opposite of what you see everybody else doing. If you see everybody else backing away from real estate right now because interest rates are too high, this is the time that you buy. And then once those prices of the properties go up, you refinance because now you own the property. The property is yours, right? So now you can refinance it. You can lower the interest rate, or you can just pay a little extra each month or extra each quarter. And that's going to also help to reduce your interest rate overall. So the thing that people have to think about again is where you see a lot of mass, where you see a lot of people, where you see people doing a lot of the same things, you want to step away from those things. Let them be in there, let them fight it out. And then once that changes, that's when you jump in. So
you mean to tell me that I should be running the crypto right now?
Listen, everybody in it, that's where you need to move from, right? I learned that from Warren Buffett said this years ago. Where you see people running to, that's where you do the opposite. And so when you see people right now, everyone's like, stay away, real estate's too high. This is the prime time to buy. So either you can, once the rates drop and those prices go up, you can either sell then and make a ton of money, or you can hold on to it because guess what? This cycle is going to repeat itself in another 10 years or so, right? So you can sell then, and that's going to kind of be the peak for the time that you've had that house. So one of the financial things that people really need to be thinking about right now is doing the opposite of all the things that they're hearing. And one of those key things, easy things that many of us can get into is real estate.
That's awesome that you said that, because one of the things that we shift the narrative too is especially when we start talking about life insurance and the things that I'm in, is like nobody in the world is talking about life insurance, but it's like one of the best and the safest places to store your money from a tax perspective. It has so many other benefits. So speaking of that, you mentioned that real estate was one of the great strategies that you should be looking to do right now. I know that real estate has a ton of tax incentives that you can take advantage of, right? Is there any other tax advantage things that people should be looking to take advantage of, especially since, the IRS came out with some new tax law changes? Is there anywhere else right now we should be concentrating or taking a look at maybe diverting some financial energy towards to make sure that we could, reducing some of our tax burden exposure right now in the marketplace?
Yeah, honestly, all kinds of assets, right? There are all kinds of assets. So one of the great big ones that everyone loves to hear. So what in my former life, I would say in my former life, when I was working in corporate America, I used to buy private jets for the company that I worked for.
What? I never knew that.
Yes. I used to purchase private jets for them. And then I would also buy real estate all over the world for all the different offices. And so one of the things I want people to realize is there's so much you can do through various assets. It's just putting a plan, sitting down to put a strategic plan in place to do it. So a lot of times we'll hear people say, I want to purchase a car, or I want to get into that private jet space. Well, guess what? There are opportunities to get into things like purchasing private jets, and then you rent those out the same way you hear about Turo and the vehicles. Well, people do the same things for private jets. Now, that does require you to have usually a bigger portfolio of money and things like that. So you want to gradually do some of those things. But right now, there are all types of things that you can do. One of the things I just mentioned was if you have a house that you're living in, your primary house, now it has to be a primary house, but if you have your primary house, you need windows, you need doors, you need new boiler system, you need things that are energy efficient. Guess what? You can write some of that off as well. So it's more a matter of sitting down and really thinking through what are the things I'm already going to spend money on. What are the things I already need to do in business? And then putting those things in place. One of the things people don't think about, life insurance. Life insurance, you can't write off, right? On your 1040. Guess what you can write it off in? Your business. You can write off in your business. You
Say
can
that again for the people in the back.
your business. You can write it off in your business. So you have to think through the thing. Like, if you know you need life insurance, why not set that up? Because a lot of companies do this, right? If they have, especially if they have more than one partner, or if it's a larger company, they will insure the CEO, the CFO, all those major C-suite people, even a lot of their employees. They will put life insurance in place. So if that person, for some reason, God forbid, passes away, they have money to replace that person, bring in somebody new, right? Buy them time until they can bring someone new. They put things aside for that.
Retirement planning,
Retirement planning, all
a
of that.
whole plethora of things that they do. They wrap a
Yes.
lot of corporate benefits around structuring with life insurance packages so that they can set their C-level employees up with tax-free income. But we're gonna get into that later. That's not what we're here for today.
But that's exactly what I'm talking about. Those same things that you're saying, like, people often think these are only things that big businesses can do. That's not
no.
true. They can reach out to people like you who do the insurance things, find out what you can do. HSAs, HRAs, FSAs. There's all sorts of insurance things that you can build into your business to help you not only reduce your taxes, but make sure you're covered if ever in case of any sort of emergency, right? There's all types of insurance things that people can do. We don't think about those things as these are things that I can do to not only reduce my taxes, but make sure I am covered. If anything happens, my family's okay. We don't do those things. And guess what? It's much easier for your business, for those of you who have a business, it's much easier for the business to take on that expense than it is going to be for you to take on that expense as the individual. You don't even have to do it out of your pocket. And it's a write-off. I mean, it's a win-win. I mean, what are we talking about here? It's a win-win on both sides. So it's like, put those things in place. Really think through, what are the things that you need already or that you already want to have? What are those things? And then put those things in place and write them off in your business. Now, I'm not telling anybody to just come up with a business just to say, I came up with a business to write off a business. You didn't hear that from me. I'm not telling you to do that. That's borderline fraud. Nobody's saying just make up a business. But what I am telling you is look at your capacity to take on a business, whether it's real estate, whether it's whatever it is that you're doing. Look at your capacity to take that on, because there are a lot of things that you can then write off in that business that otherwise you can't write off on your general 1040. So as a wage earner, you're not going to get, like it or not, you're not going to get all the big write-offs. Those are reserved for businesses. And that's a strategic play by our government, by the IRS. That's a strategic play, right, by Congress, who enacts all these tax laws or puts all these tax laws forward. So you have to look at, where are the strategies? Where are the things that can help me reduce my taxes? You got to look at where those benefits are, and then make sure that you're strategically putting those things in place. I can't tell you how many business owners that I know right now who don't have stuff like that in place. They just don't have it in place. And it's not even a matter of having the money to do it. They haven't even thought about it. So if you're trying to look at just what are some simple things that we can do right now, yes, on the personal side, it's not going to be as much stuff. You can do some retirement stuff. There's energy credits. There's different things like that you can take advantage of, but there's not a lot, right? You got to think out of the box on that side, right? Maybe cars, energy credits, that kind of stuff. But on the business side, there's so much you can do. Y'all can leverage your insurances, and we don't leave our families exposed with nothing, because we didn't put this stuff in place. We have the funds to put it in place. Put it in place, get the deduction, reduce your taxes, but also be able to cover yourself and your family if ever in place a time of emergency. Not only you, but your children, your spouses, all those things you can insure in your businesses. So make sure that you are setting these things up in such a way that you can get the tax benefits, but also keep everybody insured.
I just think that, to piggyback on what you said, like the tax code like was written for two types of individuals. It was written for the business owner and the landowner. So you got to have a business and you got to own some kind of land in some kind of capacity, whether it's real estate or hotels or storage containers, facilities. Like in some capacity, you either got to be in business or you got to own land, because that's where the majority of the tax code was written to benefit for.
Yes.
One of the things that I'm glad that you mentioned about on the business side, there's a lot of incentives, especially around life insurance, is we don't have those kind of conversations a lot because many of us are not in business. So they haven't been exposed to those ideas surrounding around how to maximize those business deductions to provide benefits. And when you're talking about in the life insurance space as well, many of us have only been taught that life insurance is for death. So a lot of times we got to have some money mindset kind of rethinking and getting rid of some stinking thinking as it relates to life insurance, because many of us think that you got to die to get it, where that's not the case. Another thing that I wanted to shine a light on is that, because it bothered me like so much. I don't know why it bothered me so much, like going through the Aretha Franklin, watching that ordeal play out. And I read an article about a month or two ago that said their family lost close to $10 million. Like $10 million was gone, that could never be recaptured, that the family had to pay in fees and taxes because simple estate planning was not done. And a lot of times in our communities, in the Black and brown communities, when we lose our celebrities, we always find out after the fact that simple estate planning was not done. Like it wasn't a will or a living will or a power attorney or a trust. None of those things were in place to kind of protect the hard-earned assets that they've accumulated over their lifetime. So is there, like, from a tax perspective, you can talk a little bit about that there is some estate planning, like tips that people can take advantage of to ensure that the financial security of their loved ones will be in place and money will not be lost unknowingly and unnecessarily to taxes because simple estate things were not done? Can you talk a little bit about that?
Yeah, so I would probably say, and this is my limited knowledge, right? Because estate planning, I'm a tax professional, right? So I'm not an attorney, I'm not a financial advisor, but I would tell you that one of the key things, one of my top things that I feel like everybody should have is the irrevocable trust. They are not cheap, and you have to make sure that you're maintaining them. But I say irrevocable trust because irrevocable trust protect your assets. So that means whenever, in case of someone passing away, you can make sure that things are set up the way you want it to be set up. No one can come in there. Creditors can't come in and take your stuff. You can put homes in it. You can put businesses in it. There's all sorts of things that you can set up and put in it. Matter of fact, I'll tell you a story. When years ago, when my husband and I purchased our house in South Jersey, it had multiple units on it. And the person who used to own it was a veterinarian. So he used to take care of animals, he used to take care of horses. And one of their properties, when we were trying to look into, like, just learn a little bit more about him and his family, they had a family trust. So it was whatever family trust. Just like a lot of us hear about the Rockefellers and stuff, right? They set these up, they put insurance in them, they put businesses in them, they have all this stuff in them. It provides protection, it provides privacy, it provides creditors can't come in and take your assets, and you don't have to go through probate when someone passes away. It's going to withstand what it is that you need it to withstand. You can outline exactly what you want the trust to do, how you want to treat your children. You can put things in it like, if my child is a drug addict at the time, they can't get the money until this time, or they have to go through you can really specify what you want. So my number one really is to set up an irrevocable trust, but understanding that not everybody has the money for that, to just jump into an irrevocable trust. Start with where you are. That will be just choose to not do anything. Do something. So if you don't have the money to do everything, at least start with, let me get a will in place. At least start with, okay, let me get some insurance. I may not have all the insurance I want. I may not be able to take this whole life insurance, and do all these things with it. I'm not there yet, but let me start somewhere. Let me get some of that insurance. Let me get some of a will in place, right? And then over time, as your money grows and as you become more stable, do a little bit more until you can get to the irrevocable trust. Let me tell you about us as wonderful Black people. And I say us because this is me. I have done this. I have been very guilty of this. And it's one of the things I said I'm no longer going to do. We will, time and time again, because we can't go from A to Z, we don't do nothing.
No.
So because I can't set up the irrevocable trust with the
I ain't gonna do nothing.
Yes, I'm just not going. I'm gonna wait, and then we wait too long. So one of the things we can do is just start with where you are. Do a little bit. Make sure you're insured. Make sure your children are insured, right? Make sure you have a will in place. Over time, let that money grow. Add a little bit more money. Get a more stable foundation. Then you can set up your next trust, right? Then you can do the next piece. So you can keep adding a little bit. But when it comes to estate planning, the creme de la creme is having that irrevocable trust where no one can come in and tell you what to do when, especially, I mean, it's hard losing a matriarch, a patriarch in a family. That's hard. But then when you're talking about now you got to go to court and fight for the home and fight for the car and fight just to get access to bank accounts. Listen, ain't nobody got time for that. So you want to set things up in a way that they need to be set up so that you can avoid a lot of that stress, not only financial, but just mental, physical stress from not being prepared. So start with where you are and then let it grow over time. Somewhere is still going to be better than having done nothing.
Thank you for that. We're talking to Shonta Thomas, Money Mondays, where we have dope financial conversations with excellent, outstanding professionals. So I want to switch the topic a little bit. I know that estate planning is so very key. There's a lot of tax benefits in estate planning. There's a multitude of things that you can do as far as, I like the part where you said that you can give instructions even after you're dead. We like to call that rule from the grave. But we're going to save that to get more in detail when we get an estate planning attorney on here that can talk a little bit more than we can off the surface thing. But I just know there's a lot of tax benefits on that. So switching gears a little bit, in your tax practice, you've been doing this for 19 years, right? And like, what are some of the biggest, I ain't gonna say biggest, but the common tax mistakes you see like individuals make or businesses, and like how could they be avoided?
So one of the big ones, and I talked a little bit about this earlier, one of the biggest mistakes people make because they don't connect the two is the bookkeeping. Everyone thinks that bookkeeping is something, oh, I can do that myself. And a lot of times people think that because bookkeeping is not something that has to be submitted to the IRS, right?
Can I tell you what I'm guilty of?
What?
I'm guilty of, I'm gonna put it in QuickBooks and it's all gonna be okay.
Listen, people be so confused on QuickBooks. I go on people QuickBooks like, what has happened? We should just start over. This is a whole lot. Let's just start over, right? So a lot of people, I think most people, I will be honest, most people think they can do their bookkeeping. And the reality is the bookkeeping is the foundation. If you can't pay for a tax preparer, I will pay for a bookkeeper before I pay for a tax preparer. And I'm telling all of y'all that your biggest mistake with your taxes is going to be your bookkeeping. Because guess what? If you say in your bookkeeping, you made 100,000, but you actually made 150, guess what's wrong? Your taxes and you overpaying, right? If you say you made 100,000 in your bookkeeping, but you really only made 50,000, guess what's wrong? Your tax prep, your tax planning, everything else is wrong. Everything, your financial planning, your estate planning, you're trying to get loans and things like that. All of that is wrong because the bookkeeping is off. So the biggest thing I see people where they mess up is the bookkeeping. If you can have solid bookkeeping, pay someone to do your bookkeeping, you will by itself save a ton on taxes. So that's the first thing I would tell you is make sure you have a good bookkeeper. The second thing I would tell you is if you're a wage earner and you're seeing that you're getting these big refunds and stuff back, that means you're overpaying every year for the most part, right? Sometimes there are big credits and stuff you can get, like the earned income tax credit. Like some of us qualify for those things. So if you are getting these big credits back, you want to sit down with your professional to ask them, why am I getting these back? Are there credits I'm getting? Are there deductions? Like, what is it that's causing me to get this big amount back? And how can I reduce my withholdings during the year so now I have more money? So for that insurance, for that wealth building you're trying to do, where you're like, I don't have the extra money to do it. But guess what? What? It might be in your monthly wages already. You're just waiting to get a big check back from the government, which meant you loan that money to the government for free for the last 12 months.
Say it ain't so.
It is so. It is so. So we're giving the government an interest-free loan for 12 months instead of just taking the time to say, let me sit down with my professional and see what I can actually reduce some of these withholdings, take more home every month, and now I can afford some of the things that I didn't think I could afford before. So that's a simple one for wage earners. Business owners, your number one that you need to focus on is the bookkeeping. And by doing effective bookkeeping, you will have better tax preparation. You have better tax planning. You can do more estate planning. You can buy more in insurance. You will be surprised at how much money that you have to do these other things when you have proper bookkeeping versus when you don't.
Would that be the same advice that you would give to a young professional if they just starting out, like, they 22, 23, like what advice would you give them for making sure that they don't adopt some of the bad habits that, like, I'll just talk about myself, like some of the bad habits that I have, when it comes to taxes. I'm pretty sure that there's a lot way more efficient and effective things that I could be doing right now. But I had so many bad habits because of not knowing how to do taxes and not knowing like all of the essential things. Like I'm a really be more intentional with bookkeeping this year, just because you said that, because no one ever really said, yo, bookkeeping for a business owner is the number one priority you should be doing right now. So for a young professional, if they looking at this, they're in college, they're about to graduate college, or they just, like you got your MBA, you're just getting started with your professional career. You're a high net worth individual and you're working. Like, what's some of the things that you would have them to like kind of concentrate on so that this tax thing, they won't develop bad habits in it?
Yeah. So some of the things I would tell young folks is, because, I used to also be a young folk, but one of the things I did not do was start early building wealth. Now, people told me, they said, put your money away, look at investing, doing all this. And I did a lot of that. When I was younger, I was talking to my husband about this not too long ago. At one time, we had 10 rental properties. And I mean, we were making with taxes, everything paid off, close to $10,000 a month from these properties. We didn't do anything with that money. We didn't make any good decisions with that money. So I would say start early educating yourself on how to take care of that money so it can take care of you later. Right? So when it comes to the tax side, you want to make sure that even if you just have that wage earning job and you don't have some sort of business on the side, just make sure that you are not overpaying too much in your taxes. Make sure that you're taking that money that you're saving. If you reduce your withholdings and you have extra money each month, make sure you're taking some of that money and putting it away, and you're creating things to build your wealth in the long term. So look at how you can utilize your taxes. And this is a key nugget for a lot of y'all. You can use your taxes to help you build wealth. The sooner you realize that, the better you are. This is money that is literally, if you do nothing, you just won't pay the government. So why not find things that will help you reduce that and take some of it or all of it and put it towards things that are going to better benefit you and help you to build your wealth. So I would tell them, listen, start figuring out how you can build wealth, how you can do it now, because you might not think it's important. I didn't think it was important. People would talk to me about compounding wealth. Do it now, because 20 years from now, I couldn't think beyond, like, I done been in school. I done been broke all my life. I finally got a job. I'm making a little bit of money, and I want to spend it. I couldn't think beyond that. But I will tell you, if I could go back, one of my key regrets is not building the wealth. One of my key regrets is not taking that time when I didn't have kids and I was just, it's just me, to start taking and building up. So I got 6 months of cash flow that's liquefied, that if anything happens, I'm okay. I didn't have an emergency plan. I didn't have a wealth building plan, right? So now, once you get older, you have children and you start thinking about those things, it's harder to build 6 months of an emergency fund. That's not so easy. But if I started then, that not only would I have that money, but it would have compounded. So I would have extra money, and I would only need to just cover the difference between what I was making then, right? And over time, what I'm making later. But because I didn't do that, it was like I had to build everything from scratch. That is hard.
Yep.
So start thinking about it early. Get those degrees, get those certificates. If you're thinking about getting it, do it before you have children. Get any and everything you think you might want to get. Get all that stuff. Save. Make sure that you are building your nest egg. Put all the pieces in place, because a time is going to come when you're like, I got to do this, and it's going to be so much harder to do it then.
That's one of the biggest things, like right now, outside of like cash value life insurance, I talk about is making sure that you save money before you do anything else. Like that is like the golden rule. I'm talking like save money before you put money into your 401k, before you put money into real estate, before you buy crypto. It's like you got to get in the habit of saving money first before you do anything else. Because one thing that I've learned in my 26 years of being an entrepreneur, right, is that if you save your money first, your money will always save you. So that's one of the first things I tell business owners all the time. You got to build up a cash reserve, because what ifs are going to always come. So that's a good thing. And you got to get, it's habit. It's habit. And I think another thing is we are not having enough money conversations.
Yes.
And that's one of the reasons why I wanted to start this Money's with Jeff, is to keep the conversation fresh and open. I know talking about money and finances is not sexy. It's not like, it's no drama and all of this stuff in it. But these are the kind of conversations that we have to have, because through these conversations, we pick up a lot of financial education. And a lot of times we're making a lot of money mistakes with money is because like people say, man, I ain't never even known that. Like nobody never told me that. Or so the more we have these kind of conversations, the less financial issues we'll have going forward. And that's why I think this is, that's why I get excited like every time Monday come around and I get to talk with a dope financial professional, because I know that it puts more good energy as far as having good conversations with people as it relates to their money. So thank you again for being on the show and talking with us. I want to switch the gears a little bit, right? I want to talk about something fun, right? Okay. So if we talking about the tax code, we talking about taxes and how to save money on taxes. You brought up so many great things for individuals, as far as, making sure that you got your energy credits, make sure you're doing all your tax deferral stuff. Those are some great things. You talked about good things for business owners, making sure they got their bookkeeping and stuff together, and a lot of other great examples that you gave with the business owners. I want to say, like, if you had one tax code that you could put into place, and it could be anything, like a crazy tax code, like it could be a tax code from a tax law that didn't currently exist right now. Like, what would that crazy tax law that will have a tax code for people to benefit? What would you do?
So it's probably not that crazy. It's probably not that crazy, but again, you're in the mind of an accountant, right? So we're or a tax person. So we're all about compliance, right? So, but I would probably say I would have two. Number one, I would
Okay.
say we don't tax the elderly because
Okay.
many of them are in fixed incomes. And so a lot of them, they're on this fixed income, and then all this money is still coming out of their taxes, money they set aside that they built wealth for. A lot of them are retired, and they need that money. Now I'm saying this knowing full well this is probably never going to happen, right? We have the baby
Especially
boom.
since they're the largest payer of taxes.
Yes, they are. Yes, they are. I'm just dreaming ahead, right? I'm just dreaming ahead. I'm just thinking ahead for myself. So that would be my first one. My second one, though, is where each individual could choose whether or not to pay into their Social Security.
Wow.
That would be mine. Because
That's interesting. Why would you say that one?
Because it is believed that by the time the baby boomers all go through Social Security, there's not going to be any left. So that means those of us who have paid thousands upon thousands of dollars are in our lifetime, we may have nothing to collect from that. What could we have done with that money? How could we have built wealth? How could we have changed our lives with that money? So I would love to have the option of whether or not to invest into Social Security because I may not benefit from it in the long run.
Wow, that's very interesting. And I think that a lot of people need to be thinking like that, even though they're still paying their Social Security right now and they don't have the option, because the likelihood is, unless something happens, like is Congress get their act together. So that's the issue that I have. Congress ain't gonna never get their act together.
Never.
I mean, so you really gonna be like Patti LaBelle said, on your own. So you better start planning on your own because ain't nobody coming to save you. The government is definitely not gonna come to save you. The only thing the government is gonna come to do is take from you because the government needs money. So I'm glad you brought that up. Next question, like just, we're just having a little fun here. Like I saw recently that I'm always fascinated with the lottery because I see that people, when they get the lottery, like I had this big conversation with my wife like the other day, and this lady in Rhode Island had won the lottery, right? And she took the lump sum, which was like, it was like some like maybe 100,000, it was like 200,000. I forget what the number was, but she could have got $25,000 for life. And she was like only in her 40s. So I was like, I told my wife, I was like, man, she gave up all that money to get the lump sum. So like, if you had a lottery winner, like what would be some of the advice that you would give them as far as how they should, effectively manage in a taxation of the monies that they will win from the lottery?
So interesting enough that you asked this question. I was actually just reading about this last week where there was a lady who won. So most of the time, anyone who hears about people who win the lottery, within so many years of that, they are broke. Their money is gone. Yep. But this was actually a success story.
Wow. Okay. Tell us about it.
Yes, it was a Black woman. Okay. And one of the things she was saying was when she won, the first thing she did was she didn't tell anybody. She kept it secret. She went up there. She didn't even tell the clerk. The clerk tried to take a picture with her to say she won. She went. She wouldn't let them do it. Went to the lottery house, whatever. They had to verify her. They asked, "Did you want to make it public or not?" She said, "Don't make it public." But the very first thing she did was go and get a financial advisor. Mm-hmm. And that financial advisor basically was like, listen, I work with a lot of people. Apparently they work with some celebrities as well. It was like, listen, if you want your money to work for you years from now and really live off this money, and that she won a substantial amount. I forget how many million it was. Mm-hmm. But even a few million, if you invest it right, one or two can last a lifetime. So he immediately set her up. There was not a bunch of big purchases and all those types of things, but like he had the knowledge because he had been working with other people who made a lot of money, who then spent that money and then didn't have anything. So
she didn't go out and buy a bunch of Gucci belts.
Nope.
No Lamborghini and living in the projects.
Nope. And matter of fact, one of the things she did do, because when she did go to the lottery house, she had gone with a friend of hers, and so her friend thought she won $30,000. So her friend didn't know how much she won. She thought it was $30,000, but her friend started telling people. She didn't tell anybody. Her friend started telling people. You know what she did? She moved to a whole nother state.
I don't blame her.
I don't
That's
blame her
that's
either.
the first thing I'm doing. I'm out.
I would have done the same thing. So that's what she did. She moved to a whole nother state. So have a fresh start. I think she did buy herself a house, but it was like really reasonable. I want to say like $200,000 for herself, and her daughter and grandchild bought them a house right close by. Those were her only really big purchases. All the other money was like invested and put away and just made sure that she can live off of it. So I forget how many years it's been. It was a number of years. Like I know it's at more than 7, but I think it's even more than that. She still has most of her money. It's still working for her now. Her nest egg is still growing, all of those things. So the first thing I would tell people to do is don't make any decisions about what you're doing. I would do what she did, keep it undercover. People don't need to know your business, and go directly speak to a financial advisor so they can tell you how to best manage that money to help your money grow.
I tell my clients that all the time. You ever hit the lottery, you better call me. I better be one of the first two or three calls that you make, so that you can put a strategy that you can have some cash now and some cash later. Because
100%.
100%, because you got it's a plethora of things that you have to do to make sure that your money that you won't. I like to say that your money, you will have more money at the end of the month than month, like most people do.
Yes.
And a lot of times people get in and they lose all that money because of hitting the lottery, is because bad money management.
Yep.
And it don't matter how much money you have. It don't matter how much money you're making. If you have bad money management, it ain't gonna work.
100%.
I oftentimes say, my wife laugh at me because I really don't play the lottery. I play the lottery when they get to like over $1 billion. I'm
Yes,
like,
I do
if
too.
they're gonna get my $3,
Yes.
they're gonna get my $3 when it's over $1 billion.
Yes.
Okay?
I do the same thing. Like when it gets, like, you know what, let's just, Holy Spirit, if you bless me, I'm gonna bless the church. I mean, help me out, right? I do the same thing.
I just like, man, it would be like the greatest movement of money, like ever, because of the way that it would be structured. Like, I told my wife, everybody would get life insurance contracts, maximum life insurance contracts. So it would be always money in the household, no matter what. Second thing, they will all get, nobody get a lump sum. People will get money, but they will get it in an annuity form. So they'll get money every month for a period of time or for the rest of their life.
Yeah.
The majority of that money is going to be going to buy income producing assets. Yes. And your lifestyle is going to be contingent on how those income producing assets that you purchase, and you're going to live off of those things. And then you got to get a tax strategy so that the monies that you've already have made, you'll be allowed to keep more of the money that you're making. So you got to have like an accountant, CPA, you need a tax strategist, you need an attorney, because people are going to be trying to sue you. You need to know how to have that money protected. You need a financial strategist like myself to make sure you'll never run out of money. And you need some, I would say a good strategy that you can execute on your terms. Yes. And that's why you need someone to come in and put the strategy and work in conjunction. And you got to find a good banker. I mean, I will put the banker into the equation as well, because it's a lot of incentives when you position your money the right ways when you're dealing with certain banks. So I would say you got your banker, you got your insurance strategist professional, your financial advisor, you got your attorney in place, and then you got those, that's your team. And now you can go execute the strategy for the team and win, like they say, the financial championship. And that's to make sure that you don't never run out of money. This conversations about the lottery, it always fascinates me, because like people lose so much money unknowingly and unnecessarily. So that was one of the reasons why I wanted to ask you that question. It was like a little fun question about the lottery.
Key to what you said though, and what you said and I said, is they're not doing it themselves. Part of our problem,
we try to do everything ourselves.
We try to do everything ourselves. You don't know how to do this. You didn't go to school for this. You, this is not your ministry. Like, I know my ministry is not legal stuff. I'm not an attorney. My ministry is not wealth building, because I'm not on the wealth building side, right? I know some stuff limited, but my primary thing is tax strategy, which has some wealth building components, but I am not a financial strategist. I am not someone who can tell you all about the insurances and stuff. We have to learn to be in our lanes and bring in the support for the areas that are not our lane. And that's what we see. That's why we see so many other communities do amazing things. You'll hear about someone in the Asian community. They might have one type of business, and then the son goes to school to become an accountant or CPA, and the daughter might go to become an attorney, and then this one might go to do. It's all very strategic. And we may not have all of that in our direct families, but we can bring in those people, especially when you have money. We can bring in those people to make sure that we can put all those things in place.
You really don't need a whole lot of money to bring those people in too. I mean, that's been the big thing that we've all been told, like, you got to have all this money to have a wealth building team. That's not necessarily true. And I think like, when you talk about ministry, like, I think my biggest ministry right now is like helping people to understand that life insurance is not a death product, that it's a wealth building product. And it is one of the most important financial products to have in your portfolio. It's not the only thing that you should have in your portfolio, but it's one of the most important, one of the foundational things to have in your portfolio, just because of the taxes. It's oftentimes when I talk to people about tax savings, and when we talk about one of the reasons why I like life insurance so much is not because of what it is what it does. And one of the things that it does is it allow your money to grow forever without paying taxes.
Yes.
So, and I'm a big proponent, is like, you got to keep more of the money that you are making. Like, yes, you gotta have a tax strategist in your corner, because all of the money saving tips are in the incentives that the government wants you to do. Mm-hmm. So where are the incentives? What is it that the government wants you to do?
Listen, can we talk about that real quick? I know our time is up, but let's talk about that real quick. So during the pandemic, and the question that you asked earlier, during the pandemic, they was just listen, you got a business, people were just making up all kinds of businesses, right? So now we have this new law that's coming out that requires people to say who the owners are in their businesses starting in 2024, right? So the government put an end to all that income that they was just giving away, but they also put in boundaries so that people can't just make this stuff up anymore, right? But guess what? There are still incentives. There are still things out there. So one of the things that's out there in this area that I'm in now in central New York is like opportunity zones. There are literally programs that will allow you to they will literally give you a house.
Whoa. Time out for a minute. Back up. Pause. Talk a little bit about what an opportunity zone is, and then jump back in there, because most people don't know what an opportunity zone is. Yes. And how us business owners know a little bit about it, but most people working a 9 to 5, or most people just getting started out in entrepreneurship, they have no idea what opportunity zone is. So talk a little bit about what that is, and then how one may be able to take advantage of it.
Yes. So opportunity zones is another way to think about it, which some people hate this. I know I hate it. I hate the thought of it, right? But one way to think about it is basically there are incentives to gentrify neighborhoods. Mm-hmm. That's essentially what it is. We're going into neighborhoods that are underserved, that are broken down, that have a lot of houses that are foreclosure, all that kind of stuff. And so there are different grants and different tax breaks that you'll get by purchasing a house there, or purchasing a business there, or flipping a property there, or fixing up housing, or fixing up a row of houses there. There are different tax incentives that you can get, and you can make a killing in these areas. Mm-hmm. And so typically what we see are others from other cultures coming mm-hmm. into our communities, mm-hmm. fixing these properties up, mm-hmm. and we don't get the benefit from it at all. Mm-hmm. But there are actually programs out there. I just talked to someone in this area last week. There's actually a program in this area where you can actually go. They will give you a list of houses. You have to show that you have a certain amount of money, right, in order to fix up the house. But listen, you can go to this program where you can go over here. They'll give you a list of houses. These are houses you can buy 10,000, 20,000, $30,000. They tell you it needs to be, these are the things that need to be fixed. This is the total cost for it to be fixed. And then you can go to this nonprofit program over here and they will actually give you the funds. And as long as you do that, then they will actually give you the house for free. So that 20, 30,000 when they gave it to you to fix it up and you did everything you were supposed to do,
it's all forgiven.
It's forgiven.
Wow.
Now
and sanitized back to you.
Yes. So the actual purchase of the house is forgiven. The part where you fixed it up and they gave you money towards that loan, you pay that piece to them back. But when you sell it, you're making $50,000 to $100,000 off that property, or you're refinancing it, or whatever the case is. Maybe you're getting a loan in your name, but you just made $50,000 to $100,000, and now you stick a tenant in it. There are programs out here.
So we're gonna have to do another segment on this. Maybe we bring you back. I have a great idea. I'm gonna talk to you about it offline. Okay. Because one of the things I want to do is foster more conversations like this. I did a virtual summit last week when we talked about, building basically passive income streams. Yes. And I want to do more of these kind of talks just to give people exposure. Because one of the things that I've learned over my life is that when you understand what's going on, you'll know what to do. Mm-hmm. And oftentimes we just don't know, we don't understand what's going on, so we can know what to do. So as we start to bring this financial education and put it on the forefront, more people be able to take opportunities of things that they are passionate about, things that they want to learn about, but having the mindset and the money mindset that there is a wealth building process in place in a forum where you can have dialogue so you can start to financially win. That's very important for me. I think as I get better, one of the things I want to do is become a better facilitator of bringing people together to have these kind of conversations. So that's one of the things that excites me as well. So I'm going to talk to you offline because I got an idea on what you just said for something that we're trying to do in February that I would love for you to be a part of. So, we on this Mondays. I can't believe a whole hour and 58 minutes and passed by, that fast. I know you told us that we'll have an hour that we could kind of chop it up on the tax thing. So I'm happy and grateful I had the opportunity to talk to Miss Shonta Thomas from Shonta Thomas Enterprises. She's an enrolled agent with the IRS. She got an MBA. She's highly qualified. She knows the tax code. She usually works with people who are making a couple of dollars. So I'm happy that she came to talk to us here to kind of shine a light on some things that individuals can do and shine a light on some things that business owners can do as well. Do you have any last words that you would like to say, my dear?
My last parting words: if you are needing help or support, even if it's something that maybe I don't specifically do, but if it's an accounting and tax space, I know someone who knows someone, we can get you the support you need. So don't be afraid to reach out. You can find me at shonta@shontathomas.com. My name, first name at firstlastname.com. And you can shoot me an email. I'll be happy to help you and support you, but don't be afraid to ask the questions. Wealth and wealth building is right around the corner, but you got to open your mouth so we can support you in getting there.
Closed mouths don't get fed, right?
We don't get fed.
That's right. So thank you again. I'm going to make sure that I have all your information in the show notes so people can reach out and touch base with you. I encourage them to have any tax questions to reach out to you, any bookkeeping questions to reach out to you, because you are a wealth of information, a wealth of knowledge. And I like about you that you are a compassionate enrolled agent. So you're looking out for people so they will be in a better position to be in control of the money that's coming in under their management. So we like people like you. We want you to be in control. I think one of the days, the next thing I want to tackle is I'm going to write a little, like a guidebook for aspiring entrepreneurs and for entrepreneurs. Like these are some of the things that you should never give up. And one of the things is a tax. You should not give up your tax strategy to someone else. You got to be in control of that process, and you got to make sure that you have a good tax strategist in your corner helping you to navigate where all of the incentives are in the tax code. I keep saying this over and over and over and over and over again. The tax code is nothing but a series of incentives that the government wants you to do. They like, if you do these things over here, we're going to give you tax breaks or money over here. So that's why we got to start to have more of these conversations so we can keep more of the money that we're making. So Shonta, I thank you again. Shonta Thomas Enterprises. You can make sure you find her. What's your contact information again?
You can find me at Shonta at shontathomas.com is where you can email me. You can also find me online at shontathomas.com.
There it is, y'all. Bam, in your face right there. Another dope jam. Financial literacy education Mondays is a wrap. Money's with Jeff. Shonta Thomas again was on. We thank her for lending her knowledge and expertise. And I'll see you next week when we talk to another dope financial professional. Jeff the Wealth Builder here, financial advisor, strategist, and cash value life insurance enthusiast. And I say peace until we talk again next time. Have a great day, guys.